Welcome to All That Matters, a show about what's really worth your attention in the markets and economy today. Join hosts Michael Antonelli and Ross Mayfield as they tackle the latest headlines and answer real questions from clients.
Welcome to All That Matters with Mike and Ross. Ross, it's July, okay, summer. We're in the midst of the summer. Markets in the summer can be a little slow, admittedly, but it's at an all-time high. The stock market's at an all-time high, bouncing from that what we went through in April when you and I talked to everybody on this show about how to think about a storm and writing it out. Now the stock market's at an all-time high. Ross, what's going on with your summer right now?
Well, we had the storm, then the flowers, and now in the Midwest in Kentucky, it's just been 105 degrees for like 4 straight weeks. So we've been hunkered down. But you're right, markets are hot too. It's a good time to invest in it. We're gonna finish with some stuff on all-time highs because I think it's important to talk through. But this is kind of going to be a bit of a like summer riffing episode. A few things that we've heard from clients that we want to kind of just give our takes on. And just think, a little bit of a history lesson too. That's your forte. That's your specialty, right? History major. So this will be fun.
Yeah. We figured, we get a lot of questions from clients. That's the whole purpose of this. This whole show is revolved around what can we answer that's on our clients' minds in a fun and easy to understand way. So today we're going to do 3 worries that have been with us forever. 3 worries that have been with us forever. We're not doing the national debt because we've already done 2 episodes on that. So we're going to do 3 other worries that have been with us forever. The first worry we're going to start with is new technology. Is AI something to be afraid of? Is new technology something to be afraid of? Ross and I delved into the history books, some really, really cool stuff. We're going to throw an image on the screen right now of, it looks kind of crazy if you look at it here for a couple seconds. It's when the light bulb was created. When the light bulb was created, this was a piece of art about what might happen. And just remember, worries about technology have been persistent forever. Ross, I got a couple quotes and I'm going to kick it to you. These are great. I kind of dug these out of a history book. In 1825, people thought trains would rip a body apart. Trains would rip bodies apart when you got on them. Sewing machines, when sewing machines were created, they thought it would threaten livelihoods and disrupt social norms around women's roles. This is just the sewing machine. And then a third one that I thought from the 1900s, when the telephone was created, that it might make you deaf and that the electrical current might kill you. Ross, AI, people get afraid of it. Phones, sewing machines, light bulbs. This is just same as ever, right?
Yeah, truly same as ever. I mean, I don't think you or I know exactly what the AI future is going to look like, but if it were, a technology that were a net reducer of jobs or of like demand throughout the economy, it would be the first time, right? New technology comes around, it changes things, people have to adapt, but almost universally, we're better off down the road. 2 things I wanted to say. I pulled this stat that I think we may have even shared it before on an AI episode, but since 1940, 85% of employment growth is industries that didn't exist before. It's industries that didn't exist in 1940. So technology-driven creation of new jobs. So you have a new technology, a smartphone, social media influencer. That's a job, much as some people might roll their eyes. That didn't exist 50 years ago, right? So that's a whole sector of the economy that didn't exist. And then, I think you and I are both optimists, sometimes, techno optimists, and that grates against people. And I would say if you think that our take on this is wrong, if you think that, AI is going to eat jobs, the one thing I would say is just make sure you own the companies that are doing the AI then, right? If you own the S&P 500, you own the tech companies with this technology. So own the robots, own the AI, especially if you're worried about it. I would do so anyway. But yeah, it's one of those things that's going to be with us, this technology, the last technology, and whatever the next technology is too.
Yeah, that's right. The technology thing is it's okay to wonder what AI might be. What could I invest in? What will it do to the economy? Just know that technology, all the way back to the 1700s, people were worried about newspapers and books. And this is just how humanity is. We worry when something new happens. It's just how things work, and they always will work that way. So don't get too caught up in like, is this going to be the Terminator movie or is every job going to disappear? They're not. Okay, they just won't.
Yep.
So, all right, the second worry we're going to do, Ross, we're going to do the Fed. Hating on the Fed. This one is pretty relevant because you'll see every now and then President Trump will kind of take a jab at Jerome Powell, who's the chairman of the Federal Reserve, about lowering rates. They're upset about the Federal Reserve and what they're doing. We're going to put up an image on screen that I found, Ross, and I'm going to let you riff on this one. It's from Bespoke, which is a good kind of data provider, finance provider, and it's a couple headlines from history. Volcker People were yelling at Volcker, who was one of Reagan's Fed chairs. John F. Kennedy urges the end of Federal Reserve autonomy. This worries about the Fed and what they do are persistent throughout history because they are such a powerful entity. The chairperson of the Federal Reserve is probably the third most powerful person in the world, behind China and the U.S. premier. So Ross, and it's not politically driven, right? Because they're supposed to be independent, right, Ross?
Yeah, I mean, they're a useful scapegoat. All presidents, all parties in power want the economy to be as good as humanly possible. And if you run a super hot economy and do everything you can to juice the economy and add jobs, that's great, but that can create inflation. So the Fed is there, standing to the side, keeping interest rates where they think they should be, to prevent that from happening. Now, if you're the person in power, you're like, lower rates. Let's juice the thing. We've got an election coming up. We got midterms in what? God, just over a year now. Re-elections. Like they want the economy hot. High interest rates are explicitly meant to cool the economy. So, whether you agree with the Fed's position or not, they're a very useful scapegoat, and have been, as you mentioned, throughout history. And the only other thing I would say is, and I think this is worth keeping in mind, and I'm sure President Trump has advisors who are telling him this. Since they cut rates last fall, the Fed cut rates. The long rates are up. Your mortgage rates went from like 6% to 7% since the Fed cut. So the whole argument, one, it's happened a million times before. Every president wants low rates, a great economy because they want to get reelected. But then two, it doesn't even necessarily work like that. There's a lot more going into it. So I'm glad you found that image, though, because it is easy to forget when we get caught up in the moment that this has happened time and time again before.
There's just so many moving parts in the economy. It's something Ross and I talk a lot about here. You can't take one thing and say, if this, then that. If this happens, the stock market does this. If this, it's just too complex. President Trump wants lower rates. We all want I want lower rates. Borrowing rates. We all want lower rates. But does that stoke inflation? If you're going to stimulate the economy with a new tax bill or tariffs or taxes and stuff like that, does that stoke inflation? The Federal Reserve chairperson has always been a scapegoat throughout history, and it's just no different today. It's no different. It's a position that's meant to be independent. It's not meant to be outside of the use of politicians to affect rates, because this person is, and the committee that votes on rates. By the way, the committee votes on rates, not one person. Jerome Powell doesn't just set rates; it's a committee of people. They are super powerful. All right, let's go for the third one. Ross came up with this really cool image about investing at all-time highs versus any other period. We've talked, I think, before about all-time highs when we did our myth-busting episode, I think, Ross. It's something that comes up a lot. Customers, clients, advisors, friends, family will come up and they'll say, should I take profits? The stock market's at an all-time high. Is this a time to sell? Is this a time that I should be getting out of the market? And what I like to say, and I'm going to toss it to Ross to riff on this, is you can't have it both ways. You can't be upset and scared when the stock market's going down and when it's going up. Like what version of the world are you looking for when you're scared at all-time highs and when it's going down? So my view is the stock market making all-time highs is not a reason to sell. And Ross is going to kind of talk to you a little bit about why.
Yeah, I mean, you're 100% right. And frankly, it's just a bullish time to be invested. You can look at the chart and see that the forward returns are actually better when you're investing at an all-time high. But look, we're at an all-time high a lot. It's really like, it's not like you're at the edge of a cliff or the mountain peak, right? We hit all-time highs all the time. It's like base camps, right? Yeah. You're just always working your way higher. I pulled the numbers right before we hopped on. We've had over 400 all-time highs in the last 13 years. So basically since the 2009 bull market or bear market ended and we kind of got restarted on a bull market. The only calendar year since 2013 without an all-time high was 2023. So basically every year, at some point in the year, we're hitting all-time highs. So this is, if you had jumped out at the new all-time highs we made in 2014, you would have missed one of the great bull markets of all time. Same with 2018, 2020. It's a bullish time to be invested. It means that things are working, right? All-time highs don't happen in bear markets. They don't happen in a recession. So it's bullish. It's a good thing. The data bears it out. But it is an anxious time to put money to work. I get the impulse, but like you said, if stocks started to go down, it wouldn't be for no reason.
Yeah. When stocks go up and they make new all-time highs, what the stock market's saying is that I think things are getting better. That's what it's saying, essentially. I think things are getting better. We, the market, the market think that earnings and the economy and consumer spending is getting better. Can that change on a moment's notice? Of course it can. We're not here to say that it's just going to keep going up in a straight line. We would never say that. It's just all-time highs are generally the market saying, I think things are improving in the United States. Ross, we're going to end on a hot take. I just thought of it while I was standing here. I want to get your response on this because I don't know. You have a kid. I don't have a young kid like you do. Here's my hot take. So I watched Superman and Fantastic Four and some of these like Jurassic Park, some of these like new summer movies that come out. I'm a Gen Xer. I do think movies were really, really much better in the 80s and 90s. But movies, here's my hot take. Movies are so forgettable nowadays. They're fine. You go into them, they're fine. Superman was fine. Fantastic Four, good, fine. But you walk out and you're like, I don't know, that was fine, but forgettable. Have you felt the same way?
Yeah, I mean, mine is definitely like on a lower tier, but we go see like the new Pixar, the new cartoons or whatever. And there's like some nostalgia baiting. I'm always like, the stuff was better back when I was a kid, but I feel the same way. It's like a lot of sequels, which are just kind of like inherently forgettable, especially if it's like the third or fourth one. But I don't know, man. I don't know what it is. Are we just out of ideas? Is that all it is?
Yeah.
Like Superman, like we haven't made, God, we need a new take on Superman, even if it's good. Like,
they're just. We're never going to make like a Shawshank Redemption or a Pulp Fiction. Like are we ever making those ever again? Like I have no idea. Anyway, all right.
There must be like indie movies. I don't know.
Yeah.
They're outside of my purview. I'm not hip enough.
All right. Thanks everybody for watching. It's summer. The markets, we're just trying to come up with some fun stuff for you guys to talk about. But next month we'll come back. Hopefully something fun. We haven't really delved into that. I think Baird will be doing some content around the new One Big Beautiful Bill. There'll be plenty of that for you guys. Ross will have some stuff. I'll have some blogs and stuff out. So we'll catch you next month.
See you, Mike.
Thanks for watching All That Matters. Opinions expressed in this episode belong solely to Mike and Ross and do not necessarily represent the opinions of Baird. This program is for informational purposes only and should not be relied upon for any investment decisions.